Hi guys, with me again Adi Kurniawan Yusuf. So in this video, I will talk to you about overview of financial management. In the beginning, I want to ask you first, what do you think about finance? Some of you may say that finance is about money. Yes, that's correct. Finance is about money. Talking about money is always interesting, right? For example, I give you money right now freely. I believe that you will receive it. So talking about money is something interesting. Because finance is about money, so talking about finance will also be interesting. Finance itself is one of 4 pillars of management together with marketing, operational, and human resource. Well, back to the definition of finance. So what is finance? Basically, there is no clear and concise definition of finance. Finance is broad term that encompass money, investment, money management, financial system, capital market, banking, leverage, and many more. Oh my god, what is that? Don't worry, as the time goes, you will learn it one by one. This is one of frequently asked questions. Is finance and accounting same? It looks same, but it's different. So finance and accounting is different. Accounting reports financial statement, while finance analyze and interpret that financial statement to take several decisions. So accounting reports financial statement and finance analyze and interpret this financial statement to take financial decision. Do you see the difference, right? Then what is financial management? I can simply mention that financial management is process of managing money. One more time, financial management is process of managing money, from planning, organizing, controlling, and also monitoring financial resources. Finance itself includes 3 main categories. First is personal finance. It is finance for individuals. For example, how to prepare money for your retirement or retirement fund, or how to invest correctly to achieve our personal financial goal. This is personal finance. Second is corporate finance. It is finance for business or financial activities related to running a corporation. And the last one, the third, is public finance. Public finance is finance related to government money, related to monetary and also fiscal policy. For example, tax, government spending, and debt issuance policy. In this video, we will focus more on corporate finance. Because of that, because we talk about corporate finance, you have to understand first several types of business organization. First is sole proprietorship. It is an incorporated business owned by individual. For example, you alone create your food and beverage startup business. It is sole proprietorship. This type of business is easily formed and not expensive. There are not too many government regulations, and its income tax is lower, of course, than corporation. That is the advantage. Then what is the disadvantage? Because the owner is you alone, it will be harder to get trust to get large capital. And then if your business get lost, for example, and then you borrow money from external party, you personally are responsible to pay it until it's paid off. Or I can say it has unlimited personal liability. In addition, The life of business is also limited to the life of the owner. If the owner dies, then the business will stop. Next, the second is partnership. So, partnership is legal arrangement between two or more people who decide to do business together. So, for example, if you make business, create business with your friends, we call it as partnership. Now, what are the advantage and also disadvantage of partnership? We talk first about the advantage. Partnership is also easy to start and inexpensive. And the income tax is taxed 1 as personal income. In addition, because right now you have your friends, so more capital could be acquired compared to the proprietorship. Then what are the disadvantages? Yes, unlimited personal liability, same with sole proprietorship, is the risk. So if you borrow money for your business, you and your partner have to pay it, and sometimes you have to sacrifice your own asset to pay it. The partnership could dissolve if one party dies or want to sell the ownership, but it is so difficult or it is so hard to transfer the ownership. That is partnership. Now let's go to the third. It is corporation. Corporation is legal entity that is separate and distinct from its owner. In Indonesia, the type of corporation we call this as PT or perseroan terbatas. For example, Unilever, Wings, Indofood. Then, what are the advantage or disadvantage of corporation? Let's talk about the advantage. The advantage is that first is corporation is easy to raise capital. The second one is that owner assets and company assets are separated. So company's debt will not affect individual's debt like sole proprietorship and partnership. The third, in corporation, it has unlimited life, not depend on the life of the owner and easy to transfer the ownership. But there are some disadvantages of corporation. First is that to set up corporation, it is not easy and costly. Moreover, double taxation will occur. Corporation itself has to pay tax from their income, and when their employees get their salary, they will be taxed also. Well, after you know about the types of business organization, then the question is, what are financial managers' role in those business organizations? So basically, financial manager has to decide 3 main financial decisions. Wait, sir, I don't want to be financial manager, so I think I don't need this. But listen guys, that I believe that all of you want to be businessmen, right? So as businessmen, you also have to understand this. Then what are those 3 financial decisions? First is investment decision. You can say it together with me, investment decision. Should this company invest in this project or not? Should the company invest in new opportunity or not? This is investment decision. To decide, they need tools we call as capital budgeting. One more time, to decide, financial manager need tools we call as capital budgeting. Moreover, working capital management is also needed to make sure day-to-day finance are managed well. Second is financing decision. In this decision, financial manager has to be able to answer this question: where should the firm get its long-term financing to support long-term investment? One more time, where should the firm get its long-term financing to support long-term investment? they can borrow from the bank or other parties, we call it debt, or from their own capital, we call it as equity. So between debt or equity. Capital structure is the proportion of debt and equity the firm uses to finance its operation. And the third is dividend policy. Dividend is part of company's net profit that is paid to the shareholder or the owner of the company. So for example, if the company has income $1 million and then 300,000 will be paid out to the shareholder, we call it as dividend. While the rest $700,000 we call it as retained earning because it is retained in the company. How many percent of profit should be distributed as dividend is related to dividend policy. Well, after I know what is finance, what are the types of business organization, what are three main decisions financial managers has to decide, then this is the important part. What is actually the goal of financial management? Okay, I'll ask you, why should the company conduct financial management? Some of you may say, maximize profit. No. Minimize costs? Also no. Maximize market share? Also no. Maybe you wonder, are you sure? Yes. Why? Because all that I mentioned before are only for short-term goal. If the goal of financial management is maximize profit, how could you maximize your profit? It's easy. Just minimize your costs, right? To minimize your costs, how is the way? Just try to use imitation good, then you can sell it to the customer, then you will get higher profit than before. But the result is that your customer will not trust in your company anymore. So if the goal of financial management is only maximizing profit, there are many ways, including bad ways, to maximize the profit in the short term. But it is not good for the company for long term. Then maximizing market share. To maximize market share, you can directly open as many brands as possible in all cities in a country. But you don't understand, you don't know whether it will be profitable or not for your company. So maximizing market share should not also be the goal. Then what is the goal? The primary goal of financial management is, listen, maximizing shareholder wealth. Maximizing shareholder wealth, or we can say maximizing value of the company. It is long-term goal. So to maximize shareholder wealth or value of the company, of course the company has to think the best strategy not only for short term but also long term, so the value of the company will continuously increase. So have you got any idea about what finance is? So finance is something interesting, and as businessman, at least you have to understand the basic concept because finance is related with money, profit, and business continuity. If you are interested in finance, I have good news for you. There are a lot of finance job opportunity you can take. You can become financial division in a company, you can become financial manager, financial director, financial analyst, and also consultant, insurance analyst, stock brokerage, banker, financial educators, and many more.